So in the last class we have completed C series deductions and all, especially these set were completed. 80C, 80CCC, 80CCD, CCE and CCH. So this will be a set. Now let me focus on these three. D. One is premium payable for mediclaim policy. The premium amount can be deductible under section 80D from your gross total income. Or for treating some specified diseases, if you are incurring any expenditure, that expenditure can be debited or deductible. If any dependent being disabled, okay, then for them, if you are spending any money, okay, then you can claim the deduction under section 80DD. D for doctor, like you can easily keep in your mind, okay. D for first insuring yourself. DD, dependent disabled persons and for whom you are spending the money. DDB, personal treatment, like you can keep all these three in your mind. Let's start with the 80D. 80D. Now, so under 80D, we have almost four aspects. Is that okay? Now, medical insurance premium paid can be deductible, or central government health scheme, for that if you spend any money, or spending money for preventive health checkup or medical treatment. So four spendings are covered under 80D. For spending: medical insurance premium, central government health scheme, preventive health checkup, medical treatment. So in case of family, okay, leaving the Hindu undivided family, okay, so we have two blocks. One is for parents, another one is for self, spouse, dependent children. Children should be dependent. You have individual deductions limit for this block as well as this block. Okay, clear? Now, so in this block, we may have the senior citizen, other than senior citizen. Assume that other than senior citizen scenario, okay, other than senior citizen, okay, otherwise not being senior citizen, not senior citizen scenario. In case we don't have senior citizen in this team or in this team, okay, Mr. A, Mrs. A, and X as well as Y. X being the dependent children of family A, Y is not being the dependent, and any premium payable for Y's medical purpose will not be deductible. Only these three will be taken. Similarly, A's father, A's mother will fall under the other category. You can claim the deductions for this separately, for this separately. Clear? And after confirming, we classified two parts, like assess his father, assess his mother, assess he himself or his or her spouse with the dependent children. Two blocks there. Maximum deduction per block being 25,000. Maximum deductions being 25,000. The ceiling being 25,000. Is that okay? For this 25, for this 25. Clear? This is very, very important. When, if in this we don't have the senior citizen, if we have the senior citizen, I have to consider that part separately. If we have senior citizen, we can calculate that separately. Not senior citizen, then out of the 4 expenses, 3 expenses are now taken. Number 1 being mediclaim policy premium, mediclaim. Another one is central government health scheme. Third being preventive health checkup. Preventive health checkup. 3 blocks. The spending for spouse, self, and dependent children, take the entire value. This entire value is subject to a maximum of 25,000 can be deductible. Is that okay? So this value or this value, whichever is lower, can be deductible. Now, in case of senior citizen, what we had to do? After calculating that, now again find out the mediclaim premium paid for whom? For the senior citizen, or understand, this is R, medical treatment of senior citizen. Medical treatment. What does it mean? So, in a family, 4 members are there. Assessee and spouse of assessee, then dependent children 1, dependent children 2, independent children 3. Independent children is not eligible. Suppose assume that the assessee being senior citizen. Leaving the senior citizen, the mediclaim policy premium paid, central government health scheme amount spent, preventive health checkup amount spent, all the 3 put together for these 3 can be deductible maximum of 25,000. Thereafter, any premium, mediclaim premium paid or medical treatment paid, or for whom? For the senior citizen, probably around 25,000 or 30,000. Assume it is 30,000 rupees. You have to add these 2, and after adding these 2, the maximum deduction is only 50. Which one? This value and this value. By adding these 2, now we have one more maximum deduction, which is 50,000 rupees. From this, it is very clear. Without senior citizen, the limit is 25,000. By including the spending for the senior citizen, you can increase to up to 50,000 rupees. Is that okay? So you have to first compare, find out whether the payment for mediclaim policy, central government health checkup, preventive health checkup and all, preventive central government health scheme as well as preventive health check. All the 3 should be less than or equal to 25,000 in case if it is not applicable for the senior citizen. After that, 2 items are there. Either it may be mediclaim policy paid or medical treatment done. Between these 2, one can be taken. Usually, in the absence of medical treatment, mediclaim policy will be taken. If medical policy is there, medical treatment cannot be taken. You can take one of these 2. That's why I use the term or here. You have to be careful here. It is not both. That too, this medical treatment is applicable only for the senior citizen. So 4 spendings are covered here: mediclaim policy, central government health scheme, preventive health checkup, and medical treatment. This medical treatment is applicable only for the senior citizen where he has not taken any mediclaim policy earlier. If he has taken mediclaim policy, medical treatment is not applicable. So leaving the senior citizen, you find out the maximum limit. If the maximum spending is should not be more than 25,000 or limited to 25,000 rupees. After that, add the spending for the senior citizen, then this limit should not be more than 50. Similarly, the same will be applicable in case of parents also. In case of parents, you know, okay, I take the same calculations and all, but central government health scheme is not applicable. Is that okay? So then preventive health checkup and total limited to 25,000. And for example, A's father, A's mother. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. 'A' 's father being 65, 'A' 's mother being 65. ' 59. Then for A's mother alone should not be more than 25,000 rupees. After including A's father value, it should not be more than 50,000 rupees. Is that okay? So this value, and then medical treatment or medical policy, as the case may be for the senior citizen, should be added. If you add these two, this value is restricted to only 50,000 rupees, can be deductible. In case of parents, only three aspects are there: medical claim policy, preventive health checkup, as well as medical claim policy or medical treatment for the senior citizen. So, which is not applicable? Central government health scheme is not applicable. Hope you will be now able to understand. One more point to be noted here is these payments should be in the form of account pay check or RTGS or NEFT, should not be in the form of cash. Should not be in the form of cash, except this preventive health checkup can be in the form of cash, this one. But there is an internal limit for self, spouse and dependent children and parents both put together should not be more than 5,000 maximum. This is internal check, and it can be even in the form of cash. Even in the form of cash. Rest of the things could not be in the form of cash. Is that okay? Internal limit. Internal limit, you have to understand. Clear? Now, see, applicability an individual or HUF. In case of individuals, spouse, parents, dependent children. Parents separately can be calculated. Spouse, dependent children and self will be separately calculated. Nature of payment, medical insurance premium, where the policy taken with the GIC or insured, where the scheme framed by the insurer is as per IRDA, Insurance Regulatory Development Authority, or central government health scheme. This will be applicable only for the individual, that to spouse, self and dependent children. Preventive health checkup is applicable for the self as well as parents, but both put together limited to only 5,000 rupees. That too, it can be in the form of cash. It can be in the form of cash. Medical treatment for senior citizen is eligible provided medical insurance not paid. If medical insurance paid, then this will not be applicable. So these are the four conditions. Payment of premium can be made any mode other than cash payment. And in case of preventive health checkup, payment can be in cash also. Maximum 5,000 for self, spouse, parent and children put together. Okay, it's an internal limit. And the payment for this will be out of taxable income only, not from the exempted income. So exempted income can be used for payment of some contribution for the deduction, comes under only 80C deductions already we have studied. In rest of the cases, most of the cases, you have taxable income only to be paid for claiming the deductions. And payment as per the scheme of GIC and IRDA approved scheme. Okay, the last one, let me explain that later on. Okay, here the picture is given, like the table is given here. Medical insurance premium, central government scheme, preventive health checkup, self, spouse, dependent children, parents of individual, whether dependent or not. The dependability is not required for the parents. So if you add up the three items, this total item is restricted to 25,000. So we got this value. If anybody in this group being senior citizen, that will be now separately added. In case of senior citizen, medical insurance premium okay, but insurance premium not paid, medical insurance policy is not taken, then you can spend for medical treatment. In the absence of this one, you can take this medical expenditure for senior citizen, that he should be resident. Then that value can be addable. So after adding, this ceiling is increased to 50. Without senior citizen 25, with the senior citizen maximum 50. Similarly, the same will be applicable for the parents, but central government health scheme is not applicable for the parents. And one more internal condition is, if you add up these two, it should be how much? Should be 5,000 only. Okay. Now it can be in the form of cash. In case of Hindu undivided family, this will be applicable for all the members. Spending is applicable for all the members, provided health checkup and central government scheme both are not available. Okay, only insurance premium is applicable. So without senior citizen, the limit is 25. With the senior citizen, the limit is increased to 50, provided in case of senior citizen, in the absence of medical policy, you can do medical treatment expenditure also. Is that clear? Let's now start with the illustration. Mr. Malakar pays medical insurance premium 19, 18, 52 on the health of himself, his wife, and his father. So, self, spouse, parents. Parents being senior citizen. Okay. Now, mediclaim policy. Mediclaim. 1. So, for self and spouse 19 and 18, what's the value? 37,000. This is not being senior citizen and senior citizen. In that mediclaim policy, for father, age being 68, so 52,000. Or you can use money for medical treatment also. Okay, all the premiums are paid by check only. Calculate the amount of deductions. In the first instant, total value, what's the limit here? 25,000. So 25,000, no senior citizen in this case. Deductions claimable being 25,000. Deduction under section 80D. In case of parents, first one 0, because no other members are all are senior citizen. Mediclaim policy paid being premium paid being 52,000, no medical treatment. The limit in this case being 50,000. With the senior citizen, the limit is 50,000 rupees. 0 and 52, 52 should be restricted to only 50,000. So you can claim 50,000 as a deduction. So overall deduction under section 80D will be 75,000. Will be 75,000. Is that clear? So without senior citizen, limit is only 25. You no need to calculate this much also. To understand, you can use this entire format. Once you understood, then for this limited to only 25,000. As senior citizen, limited to only 50,000. Finished. So simple. So simple. The structure I have given lengthy, you know, for a comprehensive understanding, but not required. In your examination, there is no senior citizen, so the limit is only 25,000. Here, senior citizen there, so the limit is 50,000. That you can calculate. So, one more point. Deductions where premium for health insurance paid in lump sum. For example, mediclaim policy taken, okay. Now, premium paid in this case being 10,000, sorry, 1 lakh, validity being 5 years, date of policy taken being 1st October 2024. How can we calculate now? The validity 5 years means from the starting date to ending date 30/9/2029. 5 years validity. 5 years validity. Though it is valid, the validity being 5 years, how many previous years this validity spreads? How many previous years? 24/25, 25/26, 26/27, 27/28, 28, 29. Even in the year 29, half year is over, so 29, 30. How many previous years this premium is having the validity? 6 years. So now this 1 lakh is divided by 6. What's the value you are getting? 16,667. So you can claim the deductions to this extent every year. 16,667 this year, restricted to 25,000. If the lump sum premium is paid, you have to divide the entire premium paid over the effective validity in terms of previous years. It is not 5 years. See, premium paid in total numerator, previous years in force. Previous years in force will be the denominator. Hope you will be now able to understand this one. Clear? Clear. Hope you will be now able to understand the section 8B. Clear? Now, let's try the comprehensive illustration here. Join with me. Mr. A, aged 40, paid medical insurance premium 20,000 rupees. Okay. To ensure his health as well as the health of his spouse, A and spouse. He also paid insurance premium 47,000 during the year to ensure the health of his father, aged 63. Now, in case of father, senior citizen, he is being senior citizen, premium paid being 47,000. Who is not dependent on him. Dependability is not required, but in case of children, dependability is must. He contributed 3,600 for central government health scheme. Central government health scheme, 3,600 eligible. Here has incurred 3,000 in cash on preventive health checkup. So preventive health checkup. For assessee, he himself and spouse both put together 3,000 rupees and 4,000 rupees by check on preventive health checkup for his father. So in the case of preventive health checkup, this payment not necessarily in the form of other than cash. It may be even in the form of cash claimable. Now, this one is not eligible for the parents. Central government health scheme is not eligible for the parents. And there is an internal limit. Okay. So, internal limit being 5,000 rupees. Internal limit being 5,000 rupees. Is that okay? So, for A spouse, how much can be claimable? 20 plus 3,600, 23,600. Okay. For parents, father, how much can be claimable? Senior citizen, no, 50,000. He has the eligibility to claim up to 50,000 rupees. So we can take 47,000 rupees. Now, in this 3 plus 4, 7,000 amount paid for the preventive health checkup. Though the payment is 7,000 rupees, you are eligible for only 5,000. So anyhow, you have to disqualify 2,000. In what case you can disqualify? So for father, you can claim another 3,000 rupees. 3,000, 4,000. For father, being senior citizen, you are eligible for claim the deduction up to 50,000 rupees. As such, now 47,000 already claimed for this purpose. Another 3,000 they have the eligibility to claim. So that 3,000 can be claimed for preventive health checkup. So father case 50. Father case 50. So here 3,000 claimed, 1,000 cannot be claimable. Any overall claiming being only 5,000, 3,000 is already claimed for the parents, and the 2,000 only can be claimable. Though you can claim 2,000 rupees for A himself, the limit is only 25,000. Okay, 2,000 can be claimable anyhow. Maximum 25 means the balance left amount to be claimable is only 1,400. 1,400. You understand? So the deduction under section 80D in overall case being 75,000. Okay, this is how you can calculate easily. Or if you get lots of confusions here, you can go with the table I have given. What's the table given? Okay, not being senior citizen, what are the expenses incurred? Mediclaim, central government health scheme, central government health scheme, and preventive health scheme, health checkup. Okay, health checkup for assessee, spouse, and parent. Okay, for mediclaim policy, it's 20,000 rupees. Central government health scheme, 3,600. Preventive health checkup, 3,000 for assessee and self, 4,000 for parents. And in case of senior citizen, either it may be mediclaim or treatment, not applicable here, being 47,000 rupees. This entire value, okay, maximum how much you can claim? 25,000 can be claimable. Here 25,000 can be claimable. 25,000 can be claimable. You know that this internal total should not be more than 5,000 rupees. This should be only 5,000 rupees. Right. So for assessee self, maximum 25,000 can be claimable. Here 20 plus 3,600, 23,600 over another 1,600 only, 1,400 is available for enjoying the benefit. So you cut and make it 1,400 only, so that now you'll get 25,000 here. So overall limit 5,000 is eligible, but 1,400 is already claimed. Okay. Out of 5,000, 1,400 claimed, you can claim balance 3,600 here. Between these two, whichever is higher, 25,000. Here, 3,600. After including senior citizen, now again one more limit we have. What is that? After senior citizen, the limit is 50,000. Now, what about the deductions claimable? Between these two, whichever is lower. Here 25, here 50. The overall value being 75,000. I have given the table to get the answer easily. But if you are able to recollect the provisions, you can get the answer fast. Hope you will be now able to understand both the method. Okay, I don't go with this format because anyhow, this topic has least importance in the coming days. In your examination also, the sum may be straightforward. There will not be so much of complications. That's why no need to work out this much of format to remember all these provisions. At least if you are able to get the answer faster, that's okay for your current examination, because all the provisions are supposed to be outdated in the coming days. You can try the next one also. If it is clear, you can try the next one. Mr. Y aged 40 years, assessee, spouse, dependent children category, not senior citizen case. Paid medical insurance premium, mediclaim premium, value being 22,000. To ensure his health as well as the health of his spouse and dependent children. He also paid medical insurance premium 33,000 during the year to ensure the health of his mother aged 67 years. Parents. In case of parents being senior citizen, mediclaim premium paid 33,000. Who is not dependent on him. Dependability is not a matter for the parents. He incurred medical expenditure 20,000 on his father aged 71 years who is not covered under medical policy. So medical treatment. Okay. So for mother there is a medical policy. For the father, in the absence of medical policy, medical treatment expenses can be considered. Here this is around 20,000 rupees. His father is also not dependent upon him. He contributed 6,000 to central government health scheme. Central government health scheme is available only for the self, spouse and dependent children, not applicable for parents. Not applicable. That's all. And preventive health checkup information is missing. Preventive health checkup is not given here. So in this case, maximum deduction being 25,000. In this case, maximum deduction being 50,000 rupees. Very simple. Is that okay? You no need to calculate independently. So 75,000 you can claim the deductions in this year for the section 80D. Now we'll move on to the next one. Compute the eligible deduction under chapter 6A for the assessment year 25-26 of Messrs. Roma, who has a gross total income of rupees 15 lakhs for the assessment year 25-26, and provide the following information about this about his investments and payments during the year 24-25. Life insurance premium paid, policy taken on 1/4/2012 before that date. Then you can take 20% on the sum assured as your maximum deduction. So 30,000 or 35,000, whichever is lower. So under section 80C, LIC premium paid can be deductible to the extent of 30,000 rupees. 10% of the policy amount or 20% or 15%. Three numbers are there. Here it's only 20% of the sum assured, and premium paid, whichever is lower, will be taken. Public Provident Fund also be deductible under section 80C, which is 90. Repayment of housing loan to Bharatiya Mahila Bank, Bangalore, if it is approved, of course, you can claim this one. Housing loan repayment. Housing loan repayment. Not the interest, not being the interest. This 20,000 can be claimable. Payment to LIC pension fund, deductible under section 80CCC. 80CCC. LIC pension scheme or annuity scheme, not covered under section 80C, deductible 25,000, but the ceiling is 1,50,000. Medical claim policy taken for self, wife, dependent children, and premium paid 30. And medical insurance premium paid for the parent, senior citizen. So for the parent, completely taken. For self, spouse and dependent children, limit is only 25,000. So 80D deduction. 80D deduction. Mediclaim premium, mediclaim policy premium paid 75,000. Let me first find out this value. 110, 1,40,000. Of course, there is a limit up to 150 can be claimable. Here also you can claim up to 1,50,000 by adding 80C, 80CCC, 80CCD class 1. If you add up all the three, the restriction is 1,50,000. Okay, as per section 80CCE, a limit being 1,50,000. Here 80C plus 80CCC. If you add up, then 1,65,000 you are getting. Anyhow, due to this one, the limit is 1,50,000 only taken. Okay, 1,50,000 plus 75, 2,25,000 can be deductible under 80C series deduction. Is that clear? 2,25,000. Okay, I think this is wrong. This one is wrong. 25 and 35, 60,000. Okay, 2,10,000 is deductible. Sorry, 2,10,000 is deductible. Clear? With that, 80D is over. Shall I move to the next one? Online students, come on, keep responding. Let's now move on to section 80DD. Section 80DD. See A's son. A's son being disabled person. Disabled person. Predominantly depends on his father. Okay. So A takes care of A's son. Clear? Now, the gross total income of A being 10 lakhs. A now contributes for taking care of his son being the disabled person. How? Either deposit for maintaining his son dependent disabled, or he can spend for medical treatment. Okay, some medical treatment. Either it may be spending or deposit. The deposit could be either in FD in his name, or you can take the insurance premium in his name. All these things are possible. A can do these two kinds of spending for his disabled son. How much is that? That amount of spending is not a matter. If the dependability or this disabled nature is anywhere between 40% to 80%, flat 75,000 deductions can be claimable under section 80DD. Dependent disabled 75,000 can be claimable. Balance total taxable income in this case being 9,25,000. Clear? Suppose if the limit is more than 80% and above disability level, then this value is 1,25,000 can be claimable. 1,25,000 can be claimable. Clear? The actual spending is only 1,000, sir. How much can be claimable? You can claim this amount even if you spend 5 lakhs, sir. By the time also you can spend. Irrespective of the amount you deposit for a disabled person or treat for the disabled person's medical requirement, whatever it may be, a fixed deduction 75,000 or 1,25,000 can be claimable. Now, the dependent disabled, that person should be family members, spouse, children, parents, brothers and sisters. Spouse, children, parents, brothers and sisters should also come here. If the dependent disabled being the brother, automatically 80DD deductions will be enjoyable. And the disability should be certified by the government physician or specialist. And disability in this case is all about blindness, low vision, leprosy, hearing impairment, locomotor disability, movement, okay, mental retardation, and mental illness. So these are some of the examples. Very often we might have quoted these specified diseases here or there, even in salary also for medical facilities, perquisites, right? For the specified diseases mentioned under section 80U or 80DD. So this is what about the diseases listed here as some diseases. So in this case, you can claim the deduction under section 80DD. Okay. Payment shall be made from the income chargeable to tax. And in case of Hindu undivided family, family members will be taken here. Already told you, no, if you are investing in LIC and the premium also within the limit, means within 10% or 20% as the case may be, naturally you can claim the amount as a deductions in your account. At the time of withdrawal, sir, maturity value completely exempted. It's not a capital assets, right? Provided if the premium payment is in a year less than or equal to 2.5 lakhs, you can enjoy that to 2022 onwards. There's a slight change that I told you in income from other sources, right? But if I'm insuring for the life of my dependent disabled as per this section 80DD and I claimed deductions under section 80DD flat amount like either 75 or 1,25,000 rupees, later on if I get the compensation or maturity amount after a certain year from this LIC company, probably A is expired, then A gets the compensation. What happens in this case? In that case, it is taxable. The insurance premium, what you pay for the dependent disabled, you claim this as a deduction under section 80DD. If you are getting any maturity value for this case, it's taxable. I already told you under section 80C. By the time also I explained that this is going to be referred along with the 80D case. So hope you will be now able to recollect these things here. Deductions for LIC. Usually amount if you are recovering on maturity will be exempted, provided if you claim deduction under section 80DD on recovery of the claim amount is taxable, keyman insurance policy taxable, and if you are getting after the death of this person, not taxable in the hands of the recipient. So you have to connect this one and that one also parallelly. Clear? Hope now you will be able to understand 80DD case here. Yeah. So applicable only for the resident individual or Hindu undivided family. Quantum of fixed deduction, it's not based on the actual spending. Actual spending is not going to be considered. A flat deductions will be available here based on the disability level. If the disability severeness is anywhere between 40 to 80 as per the certification you receive, then 75,000 can be claimable. Beyond that, then 1,25,000. Expenditure may be medical treatment, deposits for the benefit of dependent disabled person. Then dependent relative can be taken. Relative is now defined here. Hope you will be now able to understand. Deduction reversible. If dependent handicapped relative received annuity, if he gets the annuity later on, then automatically it's reversible. Before the death of the assessee, before attaining the age of 60 years, then automatically deductions claimed is reversed. Okay. So any annuity if you are receiving before the death of the assessee or after attaining the before attaining the age of 60, if he gets any benefit from this, then automatically it is taxable. The deductions claimed is reversed. Now, this is called 80DD. Suppose A says, though I am disabled, I too have the earning. Say he himself earns around 12 lakhs from his personal source. Tells his daddy, don't deposit for me, I will take care of myself. So if he invests any LIC scheme for his self life and saying that I am disabled person, can he claim so? Yes, of course he can claim under section 80U. How much? The same 75 or 125 as the case may be. But between these two, one will be eligible. Either his father can be claimable under section 80DD or son he himself stating that I am disabled person, so I invest for my future. Kindly give me the deduction. So you can claim the deduction to section 80U also. Okay, either father can claim or son can claim. Clear? Come on. Mr. X is the resident individual. He deposits a sum of rupees 50,000 with the life insurance corporation every year for the maintenance of his disabled grandfather. Grandfather not falling under relatives. Only brothers, sisters, and son and daughter and spouse will be eligible. So not eligible. The disability is one which comes under the Persons with Disabilities, Equal Opportunities, Protections of Rights and Full Participation Act. That's okay. The copy of said everything is okay. Compute the amount of deductions available. Nothing. Nil. What will be the deductions if Mr. X had made this deposit for his dependent father? In case of dependent father, he can claim either 75,000 or 1,25,000 as the case may be. Is that clear? Hope you will be now able to understand. Now, 80U. Deductions available on permanent physical disability case. This is applicable for the resident individual being disabled person. Quantum same. Notes. Disability involves the same and you have to furnish the medical certificate to claim these deductions. Either you can claim or your sponsorer can claim. So 80DD, 80U both are same. Both are same. Clear? So with that 80DD is over. 80DD and 80U both are over. Now the last one for the D series, 80DDB. Number 1 is the medical claim insurance. Number 2, DD, dependent disabled, 75 or 1,25,000. 80DDB is all about treatment. Okay. Treatment of what? Specified disease like neurologist disease, cancer, AIDS, chronic renal failure, hemophilia. So these are the specified diseases. For that you can claim. For whom? Dependent relative. Okay, the same condition what we have referred earlier can be applied here. And this expenditure for treatment of this specified diseases. This is applicable for the resident individual or HUF out of any income. Out of any income, taxable or exempted income can be used for payment of this expenses. Amount of deductions claimable in this case being actual amount spent, and ceiling is there, 40,000 rupees. Between these two, whichever is lower will be taken. From there, amount recovered if any related to the same, recovered if any, subtracted. Balance is deductible. Amount spent is nothing but for the medical treatment you may spend around 70,000 or 80,000 rupees, whatever it may be. Compared to the ceiling 40, you restrict to 40 only. And showing the same medical expenses, you can claim from the employer also. Employer gives some compensation, okay, to support the family as per the medical facility scheme in salaries. Or he might have insured. Showing the insurance number, he can get the claim back. So such a way, if he gets any benefit for the same treatment, that will be subtracted. Amount spent being 20,000, ceiling 40,000 rupees, whichever is lower, 20 is deductible. He got a reimbursement from the employer, or as it is insured case, you can get the reimbursement from any insurance company, medical insurance company, right? Star Health, like whatever it may be. Maybe around 15, you can subtract this, so balance 5,000 only deductible. If the expenses being 70 and it is restricted to only 40, then 40 is claimable. Reimbursement receipt being only 15, then 25 is deductible. 25 is deductible. Okay. And the assessee should be who? Assessee should be resident. Understand that This ceiling is now increased to 1 lakh. When? If the treatment is for resident senior citizen, then the limit is 1 lakh. Okay, assessee being the resident, it is treated separately. The patient for whom the expenses spent, that is based on the patient's age. If the patient's age is more than 60, not only that should be resident. If these two conditions satisfied, then 1 lakh will be deductible. 1 lakh will be deductible. Yes, 40,000 will be the limit. Clear? Now, see here. Rupees in thousands. Mr. Jamal resided in India. So, assessee being the resident, then he is eligible to claim. Has paid 1,20,000 for medical expenses during the previous year 24-25 for his wife suffering from cancer. Mrs. Jamal is also resident in India and turned 60 years of age on 1st April 2025. 1st April 2025. So the patient who celebrates his or her 60th birthday on 1st April, 1st April will be considered as 60 years is completed by 31st March itself. Okay, very simple. Okay, very simple. So you know that 1st April 2025 celebration means exactly 60 years ago she might have born. 1st April. 1st April to 31st March of the next year, it may be less than 1 year, right? But there's a judgment. Okay. 1st April to the next 1st April is not completion of 1 year. It's what about the starting of the second year. That's how the judgment is given. Is that clear? I don't want to talk the judgment in detail hereafter. Okay. I think I discussed that along with the earlier case, right? In tax calculations case. So I skip that here. Here you just remember, if 60th birthday is celebrated on 1st April 2025, then he is considered as a senior citizen and reached 60 years by 31st March 2025 itself. Okay. So the person who attained the 60th age, last date of the previous year is okay to confirm that he is being the senior citizen. So because of that, first case, spouse is senior citizen. Okay. Senior citizen case. And what about the expenses? 120. What about the limit? 100. So maximum 100 can be deductible minus recovery of any amount. The full treatment cost has been reimbursed by the General Insurance Corporation. So full amount 120 itself recovered. So what is the deduction under section 80 DDB? 0. 80 DDB deduction being 0. Completely recovered. Please determine if Mr. Jamal is entitled to any deduction under section 80 DDB. And if the answer is yes, determine the quantum of deduction. So no. First case is no. Also, please work out the quantum of deductions in the following circumstances. Mrs. Jamal turned 60 years of age on 2nd April. 60 years by 2nd April means she attains at 60th age only on 1st April, not before that date. 31st March, so she is not 60. So, not being senior citizen. Not being senior citizen. Case 1. Case 1, not being senior citizen. Okay, the expenses being 120 and limit is only 40, isn't it? So, between these two, whichever is lower will be taken. Amount reimbursed being 25,000 is subtracted. So, deductible value is 15. Deductible value being 15. Second scenario. Mrs. Jamal turned 60 years on this date. Naturally, not being senior citizen. Then limit is 40. And then insurer has not reimbursed any expenditure. So 120, 40, whichever is lower, 40, no reimbursement, completely deductible. Completely deductible. Clear. Scenario 3. Mrs. Jamal is 61 years of age, non-resident. The patient should be resident. Resident senior citizen, not resident case. Because of that reason, the limit is again 40 only. Okay. So the original value is 120 spending 40 and amount reimbursed 35 is subtracted. So balance 5 only deductible in this scenario. Is that clear? So the assessee should be whom? Should be resident. And to claim the higher deduction, the patient should be senior citizen come resident. Else the limit is only 40. Patient's status is important for claiming high deductions. Assessee's status is important to claim at all. Okay, if the assessee is non-resident, you cannot claim the deduction to section 80 DDB. Now, fourth scenario. Mr. Jamal, though having assessable income in India, is actually resident in Sri Lanka. Nothing can be deductible. Nothing can be deductible. Is that clear? Assessee, he himself is not being what? Resident, so not eligible at all. And fifth one, the expenditure is incurred by the assessee on cancer treatment of his 25 years old grandson. Grandson is not falling under what? Family. So not claimable. Okay. Mr. Jamal is also able to produce the receipts of the medical expenditure only to the extent of 10,000. Has he misplaced other receipts? So he has to provide the receipts. Here receipts are misplaced. Scenario 6. Okay. So actually the receipts available only for 10. And the certificate in form 10I regarding the treatment of his wife does not mention the total amount incurred. So everything is missing. Okay. Then the limit is 40, whichever is lower, 10. And the insurer has reimbursed another 5. So you have to subtract this. Only 5 can be deductible. Hope you will be now able to understand the 80 DDB deductions. Okay. Currently the 40,000 rupees deduction is meaningless. If you go to hospital to stay and get treated so much, no. The bill is guaranteed minimum 1 lakh plus. Anyhow, see this. Anyhow, this is scrapped sometimes later. Okay. In new tax regime, these things are not eligible at all. Shall I move on to the next one? Online students, come on, respond me. Now, state the quantum of deductions available in the following cases. Health insurance premium paid by cash, 10,000, not eligible, right? Health insurance premium, 80D. And 7,000 by credit card to other family members, eligible. So, 80D deductions is eligible. How much? 7,000 can be enjoyable. Cash payment towards preventive health checkup, allowable under the same section, but limit is only 5,000. Deposited 10,000 in the scheme framed by the LIC of India towards maintenance of son suffering from permanent disability. 80DD will be applicable. Permanent physical disability, I am not available. I am not able to get the information whether the physical disability level is 40 to 80 or beyond that. So you can write this way. Either it may be 75,000 or 1,25,000 as the case may be. Doctor fee 2 lakhs towards treatment of chronic renal failure of dependent father, then 80 DDB will be applicable. Okay, eligible, but it may be either 40,000 or 1 lakh. If the father's age is more than 60 being the resident, you can claim up to 1 lakh. And tuition fee paid 3.5 lakhs for son studying Cambridge University, United Kingdom, under Section 80C. Tuition fees for the whole time course can be deductible only if it is spent in India. So here it is not in India, so not eligible. So we have seen all the 4 deductions part here. Okay, during the old tax regime, you know, those who are specialized with 80 series deduction will be the most invited tax consultant. Huh? Sir, how will I get my deductions? Then they will play 80C, sir, 80D, sir. Okay, they will think you are so genius. So now all the 80 series were taken out completely. He himself says, I myself genius. You don't need to come to me. Right, it's very interesting. Okay. Now, 80D series over. We'll now move on to the 80E series. 80E series is all about interest. Okay. 80E series. If you get education loan and while repaying, if you are paying any interest, can be claimable under Section 80E. Or if you purchase the residential house property by getting the housing loan, interest payable can be deductible under Section 80E. Also the same housing loan, residential house property interest. If you are getting electric vehicle after borrowing the loan, then interest payable can be deductible. So what are the sections we have here? 80E, all these things are interest. Okay. So you can very easily remember. One is education loan, another one is EE, residential house property, EEA, residential house property, EEB, e-vehicle. Okay. Now, let me finish up the first one, education loan. On repayment of education loan, nothing is deductible. Only interest payable for the education loans can be claimable. That too for a period of 8 years. For a period of 8 years. Either the loan may be borrowed for self-education or daughter or son's education. So, you can spend for your daughter or son, and after borrowing, then you can repay. You can claim the deduction under Section 80E, or you borrow and you study. After the job, you start pay the education loan along with the interest. Then also you can claim. Either father or the student can claim. Deductions for interest on loan, not that loan repayment. Interest payable is deductible. For higher education, that education may be either in India or abroad. It should be eligible only for the individuals, and the loan should be from financial institutions or any approved charitable institutions. And the loan must be for pursuing higher studies. After passing 10th, including vocational studies, will be applicable. For individuals, spouse and children will be eligible. Deductions shall be allowed only in respect of interest paid. Remains outstanding and not eligible. So, interest paid. After the, means if you borrow the loan for the first years of your study, 3 years or 4 years course is there, you don't need to repay that loan for 4 years. Even after 4 years, 1 or 2 years gestation period may be given. So once you get the employment, you start pay the amount. So only from the date when you start pay, you can claim the deductions, not during the period of waiting. Is that okay? Amount shall be paid out of income chargeable tax. Okay, taxable income only used for this payment. Shall be allowed for 8 assessment years, not beyond that. Starting from the assessment year in which the assessee starts to pay the interest on loan. Okay, interest on loan. Borrowed in the very first year of education, starts paying in the 7th year after getting the job. From the 7th year onwards, another 8 years, you can claim the deductions. Is that clear? Or the payment is done within 2 years, then you cannot claim further. So on payment basis, you can claim. Mr. B has taken 3 education loans on April 1, 2024. For whose name? B, he himself, son of B eligible, daughter of B also eligible. Purpose MBA, BSc, BA, everything is eligible. Amount of loan okay, amount repayment of loan okay, but repayment of loan is not deductible, only interest on repayment. So this 20,000, this 10,000, this 18,000, these 3 can be claimable as deduction under section 80E. 48,000 by whom? By B himself. By B himself. If B claims, then son of B cannot claim. Or B says, I will pay these 2 so I can claim. This will be paid by son of B himself, then he can claim in his own gross total income under section 80. Okay. Hope you will be now able to understand this one. Next question. Come on, guess the answer here. Examine the following statements with regard to the provisions of IT Act 1961. During the financial year 24-25, Mr. Amit paid interest on loan availed by him for his son's higher education. His son is already employed in the firm. Mr. Amit get the deductions under section 80. Yeah, of course, he is eligible. Either son or he himself can claim. Subscription to notified NABARD bonds. NABARD bonds claimable under section 80C? Yes. In order to be eligible to claim under section 80C, investment, contribution, subscription, etc. in eligible or approved mode should be made from out of income chargeable tax. No, 80C you can claim the deductions for making the contribution out of taxable income or exempted income, you can still eligible. Okay, no. Even exempted income can also be used for this payment. Where an individual repays 30,000 rupees towards principal and 14,000 as interest in respect of loan taken from the bank for pursuing eligible higher studies. Only interest can be deductible. Okay, deduction under section 80E being these 2. That's how the statement is given. No. You will be eligible for claiming deductions only for the interest component 14, principal component cannot be deductible. Mrs. Sheila, widow of Mr. Sadish, who was an employee of Mrs. XYZ Limited, received 7 lakhs on 1/5/24, being the amount standing to the credit of Mr. Sadish in his NPS account. NPS account, the assessee he himself withdraws, then the condition is there, some 25% and all the conditions we studied. But after the death, legal hire is receiving, then completely exempted. Okay, so not taxable. Okay, such amount received by her as a nominee on closure of account is deemed to be her income. No, not taxable. Okay, Mr. Visal, a central government employee, contributed 50,000 towards tier 2 account of NPS. The same will be eligible for deduction under section 80 CCD. No, already told NPS under tier 2 comes under 80C. Okay, NPS under tier 2. So you have seen that NPS. How many N we discussed? One is NPS, another one is NABARD, Another one is National Housing Bank National Savings Certificate. In case of NPS, I already told you it's a tier 2. Tier 2 falls under 80C. Okay. Tier 1 comes under the basic one, 80 CCD. Shall I move on to the next one? 80EE. 80EE. So already we completed 80E. As per section 80E, you know, this is for interest payment on education loan. 80EE, 80EA, these two are for the residential house property. 80EB is for e-vehicles. E-vehicles. Now, let me give the summary as a C. As a C. Okay. Should be individual. Residential house property. Loan for borrowing or purchasing residential house property. Deduction. Eligible deduction being 50,000. And value of house property less than or equal to 50 lakhs. And loan sanction one 4/16 to 31st or previous year 16/17. Loan sanctioned, and then the loan amount being less than or equal to 50 lakhs. Should not have residential house property beforehand. Okay. This is coming under 80EE. See what happens, you know, Mr. A borrows and purchases house property, the value of loan being 30 lakhs. The value of the loan being 30 lakhs. Interest payable on this being 9%, 2.7 lakhs. In the current previous year, apart from 2.7 lakhs, he paid 2 lakhs for principal repayment, interest as well as principal repayment. Now tell me, what are the values are deductible? Okay. Okay. This is residential house property. We assume this is being self-occupied. Mr. A has no other house property other than this one. In case of self-occupied property, NAV being 0, he can claim the deduction under section 24 clause B, interest on borrowings. In case of self-occupied property, how much interest can be deductible? Maximum 2 lakhs. 30,000 or 2 lakhs. Latest means 2 lakhs. 2 lakhs can be claimable. If you claim 2 lakhs, then what happens here? You have 2 lakhs being negative value. This is what about the income from residential house property. Clear? If he has salary income being 12 lakhs. As per the set off and carry forward, you can set up this 2 lakhs here. Then your gross total income being 10 lakhs. And section 80C is there. As per section 80C, repayment of housing loan to the extent of principal value not more than 1,50,000 can be deductible. So here the principal repayment being 2 lakhs, you know, in that you can claim how much? 1,50,000. Limit is there. Repayment of housing loan. And apart from that, how much interest is paid? 2.7 lakhs, but we claimed only 2 lakhs. Now the question is when the house property was purchased. If it is purchased between 16 and 17 and the loan also got sanctioned during this period means in this year you are eligible for claiming deduction under section 80EE also. Interest. How much? The interest what not claimed under section 24B can be claimable here subject to a maximum of 50. Out of 270 already 2 lakhs claimed, so we still have 70,000 rupees, but as per section 80EE the limit is only 50. So 50 can be claimable. So finally the taxable income being 8 lakhs. Is that clear? Hope the person who borrows the money for house property can claim the deductions under 3 sections. First, he has to claim under section 24, that too self-occupied. In case of let out, what happens? All the interest can be deductible. You can show the loss can be adjusted in any income. But in case of our salary, only 2 lakhs, that too shift out of the default tax regime. Yes, you can adjust this in some other income or carry forward for the future. But in case of self-occupied, only 2 lakhs limit is there now. So balance, sir, no issue. We will give one more sections for claiming another 50, provided this is eligible for only if the loan sanctioned in the year 16-17. Today, no, not eligible if I get this loan now. And this is also for small house property buyers. House property value should be less than or equal to 50 lakhs and the loan amount should also be less than or equal to 35 lakhs, not beyond that. Is that clear? Hope you will be now able to understand all these cases. This benefit, this additional 50,000 is eligible only if the loan sanctioned in the previous year 16-17. Now what happens? The next ones are 80 EEA, also same, but deduction is not 50, the deduction is 1,50,000. And value, no, here the value is less than or equal to 45 lakhs, not based on the fair market value what you show, based on the stamp duty value will be taken. And loan limit is not given, but the sanction of the loan should be 2 years after 17-18, 18-19, leave it thereafter 1-4-19 onwards for 3 years 31-3-2022. 19-20, 20-21, 21-22. In these 3 years, if the loan sanctioned, okay, then eligible. Rest of the things are similar. Okay. So, if you want to claim under section 80EE, the deduction limit is maximum 50. House property fair market value should be less than or equal to 50 lakhs and loan limit is only 35 lakhs. But when it is all about 80EE, leave the 2 years, thereafter 3 years eligibility is there, 1-4-19 and 31-3-22. Within that period, if you get sanctioned, you can enjoy all the benefits. But the deductions will be 1,50,000 and the stamp duty value of the house property should be less than or equal to 45 lakhs. So there is no any concern about the loan level. Whatever the level of loan may be, it's not a problem here. Even you can borrow 40 lakhs. Is it clear? Now, eligible assessee being individual, maximum 50. Loan should be taken from the bank or financial institution for acquisition of residential property. Value should be this much, sanction this much, this period, loan this much, and not own any residential house property. Should not have any house property. This is the scheme for the first time buyers. Okay, housing for all. And first deduction will be under section 24 clause B. Thereafter, you can come here. In case of for 80EE, same condition, but stamp duty value is the main thing you have to note and sanction between this period. So rest of the things are similar. He should not get the deductions under section 80EE. How? This is not possible, no? If he claims under section 80EE, he cannot claim under section 80EA. Now let's try to finish up this one first of all. A purchased residential house property for self-occupation at a cost of rupees 45 lakhs on 1/4/2017. In respect of which he took a housing loan of rupees 35 lakhs and the Bank of India at the rate of 11%, the loan was sanctioned on this date. Okay. So though he purchased on 1/4/2017, loans got sanctioned before the end of the previous year. Now complete the eligible deductions. How much can be claimable? 35 lakhs on that interest rate being 11%. How much is that? 3,85,000. First, he has to claim the deduction under section 24 class B. How much? 2 lakhs. Here, section 80 EE 50,000 can be claimable. Balance remains unclaimed. Balance remains unclaimed. Clear? Now, let's move on to the one more thing. 80 EEB is for e-vehicle. In case of e-vehicle, the period of sanctioning being similar to this one, 1/4/19, but 1 year later also, 31/3/23. Okay. And quantum of deduction is 1,50,000. But the main point to be noted here is you need to get the loan from banks, financial institution, even specified non-banking financial corporations. Bank and financial institution. Here, even NBFC also be considered. Non-banking financial corporation also considered. Right, rest will be easy. So EEB over, EEB, individual financial institution, banks, financial institutions, specified non-banking financial corporation. Maybe deposit taking where their total asset is more than or equal to 500 crores as per the last audited balance sheet. That will be coming under this case. Period of sanction and interest is also given here. Come on, get me the value here. We'll solve this illustration now. Mr. A, date of sanction, what is that? Stamp duty value in these two cases. Then 80 EEA will come. Here stamp duty value is not given. Here electric vehicle given. So this will fall under 80 EB. EAEB. In case of B, stamp duty value, okay, EA. What is the main condition? Stamp duty value should be less than or equal to 45 lakhs. Loan should be sanctioned in this year, 1/4/19 to 31st March 22. Here 48 lakhs, nothing is deductible. Forget about this. 0. Let me come this one. This is okay, this is okay. Housing Finance Corporation, that's okay. And date of sanction being, within this period. Disbursement also made within the period, within this period. Residential house property 9% eligible. For the loan 43 lakhs. Come on, tell me 9%. 3,87,000. 2 lakhs can be deductible under section 24 class B. Another 1,50,000 can be deductible under section 80 EEA. Is that clear? Balance 37 disqualified. 37 not deductible. In case of 80 EEB, the date of sanctioning the loan should be 1/4/19 to 31st March 23. Right. So here the date of sanctioning is okay. Here the date of sanctioning is before that date. 1/4/19, before 2 days. So D is not eligible. And the loan being 20 lakhs, rate of interest being 10 lakhs. So 2 lakhs, maximum deductions will be eligible here being 1.5 lakhs. Balance 50,000 cannot be deductible. This one is not deductible because the sanctioned period is before the stipulated date. Here, this is not possible because stamp duty value is more than 45 lakhs. Because of that reason, these two disqualified, rest considered for the deductions purpose. So, with that, E series is over. Now, we'll see 80G series, especially 80G. Donation. Up to now, the spending is for your self life, but it is for the contributions. G series all for the contributions only. 80G, 80GG, and 80GGA and GGB, GGC. Leaving 80GG, rest of things are contributions. Okay, 5 aspects are going to be covered under this. Okay. So what are the items going to be covered here? 80G, 80GG, 80GGA, and GGB, GGC. This 80GG is similar to HRA like. If I don't have the HRA, can I claim deductions for the rent paid some other way? Yeah, if I am a businessman, can I claim? Yes, of course I can claim, but that will fall under section 80GG. Okay. Leaving that, rest of the 3 are donations like. Where 80GGA, GGB, GGC, all the 3 similar to the deductions you studied under section 35 as well as section 35 CCA, B, triple C and all that you might have, this one you might have studied at your CMA level, not at CA level. Okay. Okay. So section 35 expenses for R&D, where you can spend the money for your self R&D purpose, improvement of your existing process, or you can donate to third party for their research and development. These two are there. In case if you are spending for the third party's research and development, this is donation claimable as deductions only if you are shifting out of the default tax regime. Similarly, here instead of uh, keeping the money yourself, you can donate to third party but not having the PGPP income. If I have the PGPP income, the donation given for scientific R&D deductible under section 35. If I don't have the PGPP, okay, I'm a salaried employee. I want to donate for any scientific R&D purpose. Can I do so? Yeah, of course you can do so. Then it will come under section 35 CC, GGA, B, C. Let me finish up 80G first of all. I need to spend some time for making you to understand this 80G series, especially G. Let's see. In this case, 80G, deductions for donations you make. Donations you make. Applicable for all assessee. Until now, it is applicable for individual and half like, but here it is not so. Donation can be given by anybody else. Nature of expenditure being donation. That too in the form of money, not in kind. It should not be any gift article like. And that too, deductions in the form of cash more than 2000 is disallowed. More than 2000. If the donation is given in the form of cash, exceeding 2000 is disallowed. Only in the account pay form. And then donor, submit the details of the donor within 31st May from the end of previous year. And donor should get certificate of the donation from the trust also. If I donate to somebody else, I need to get the certification. I submit the certificate also for claiming the deductions. These are the cases. Here, I have given 4 classifications for claiming the deductions. Is that okay? So let me explain all those things here. Okay. Now, whatever donation you give, 100% can be claimable without sealing is the first one. With this, without sealing, 50% can be claimable. This is the second set. Okay. I name this being A category, B category, C category, D category. The donation what you give may fall under one of the 4 categories. No sealing 100% category, no sealing 50% category. Another one is sealing is there. With the sealing 100% category, with the sealing 50% category. Sealing means the sealing is 10% of adjusted total income. Adjusted total income. Okay. Assume that A, B, C, D. The donation given being 100, adjusted total income being 500. If I donate 100 rupees, if the donation falls under the category A, how much I can claim? How much I can claim? Sealing is not there, so 100% can be claimable. 80G deduction being 100%. If the donation falls under category B and the donation is 100, only 50% on this is deductible. Under C category, then automatically sealing will come here. Sealing not applicable, not applicable. Right. So in this case, ceiling applicable. Ceiling is 10% on adjusted total income. Adjusted total income assumed to be 500, then 10% on this being 50. Between these two, whichever is lower, on that 100% will be claimable. 100% being 50. 100%, 50%. Is that okay? You have to multiply these two to get this value. 100 into 100, 100 into 50, 50 into 100. If the donation being in the last D category, ceiling is applicable, the ceiling being 10% on adjusted total income 50. Between these two, whichever is lower. On that 50, only 50% is allowable. How much? 25. Only 25. Clear? Any doubts here? Now, this will be C and D put together, this limit will be applicable. Ceiling 10% of adjusted total income will be applicable for C types of donation and D types of donation both together. Assume my donation being in C around 60 rupees and D around 60 rupees. My donation being 60 for C and 60 for D. How can I claim? How can I claim? Overall donation being 120. What about my ceiling? Only 100 is my ceiling, which is nothing but, sorry, 50 is my ceiling. I just make a slight change. This may be 40 and 40. This is also 40, this is also 40, overall being 80. Now what about my ceiling here? 10% of the adjusted total income, 50. Now the question is that ceiling 50 can be applied for C or D? It is for C and D put together. Then you have to show this 50, out of that 50, 40 rupees is for this, another 10 rupees is for D. Thereafter, you have to apply the percentage. In case of C category, 100% will be applicable 40. In case of D category, whatever the eligible deductions are that 50%, only 5 rupees. Only 5 rupees is deductible. So 45 can be deductible out of 80. The ceiling, 10% ceiling is in total applicable for C as well as D. You have to find out that limit first of all, and that limit is now segregated for C and D. Avail fully for C, because if you are availing fully for C, 100% of that can be deductible. If you avail this way, sir, ceiling 50 only, no. 40 rupees is for the D, sir. Balance 10 for C means in that for 10, 100% 10, in this 40, only 50% 20 is deductible. So you are losing some benefit. Rather than deducting 45, you deduct only 30. So A category, B category, sorry, A category, B category, C and D category. A category 100%, whatever the donation you give, 100% can be deductible. B category 50% can be deductible. In case of C and D, first of all, total this. Apply the ceiling here, maximum will be between these two. This is the maximum. After that, in this, first claim 100% donation with the ceiling, that will be claimable. Balance is for the 50% donations with ceiling. In this amount 100% deductible, in this amount 50% deductible. Okay. So I take the same illustration here. A category 100, B category 100, C category 40, D category 40, adjusted total income being 500. So A category 100 here, B category 100 here. In this 100 percentage can be deductible. In this only 50% can be deductible. And C and D put together 40 plus 40, 80 in total. And 10% of adjusted total income being 50 only taken here. Between these two, whichever is lower. Now you have to show this 50 is for what? You should show for the C categories are 40 balance. First you have to show for this C category. Out of 50, 40 is for this means balance is for D category. If you are showing this for the C category, on that 100% can be claimable. For this only 5%, 50%, 5 rupees can be claimable. Overall deductions being 195. The actual contribution is 280, but you are eligible for claiming only 195 under section 80G. You have to understand this calculation first of all. A category 100% claimable, B category 50% claimable. C and D both put together, maximum will be only 10%. You consider that part first of all, calculate that part first of all. That ceiling amount, based on ceiling amount, you calculate it. No, in that first avail for C category, balance is for the D category. For the C category, 100% can be applicable. For the D category, eligible number, 50% can be applicable. So this is the calculation part. Clear? Now, what is adjusted total income, sir? You have to consider the total income, gross total income, excluding the income taxable at the different rate. What are the incomes are taxable at the different rate? Long-term capital gain and short-term capital gain. Gross total income and remove the capital gains taxable under section 111A, 112 or 112A long-term capital gain. You understand? And claim all the deduction under chapter number 6A, 80C, 80D, 80 triple C, whatever the deduction may be. Claim all the deduction except 80G. Okay. So, these three are subtracted. Any payment to NRI from dividend and interest should also be subtracted. Of course, this is not applicable at your inter level. It's a final level. So, you now need to know these three. From the gross total income, deductions claimed under chapter 6A except 80G, short-term capital gain, long-term capital gain are excluded. Even share of profit in AOP entitled to rebate under section 86 also be not required for your level. CA inter not required. Okay. So from this, only these two are going to be subtracted. This final value is called adjusted gross total income. So adjusted gross total income is nothing but gross total income from their tax leviable at different rate, long-term capital gain and short-term capital gain under 111A. Not all the short-term capital gain, only short-term capital gain falling under 111A are excluded. Now the question is, what are the donations are falling under A category, B category, C category and D category? So A category donations are these six, around 24, and this will be B category, this will be C category, this will be D category. How can I remember all these things, sir? Very simple, a shortcut I will give you. Okay, here the family. What's the family? Nehru, Indira Gandhi and Rajiv Gandhi. If the donation has these names, then 50% will be applicable. Okay, 3 generation. Apart from that, even sometimes posting will be there. PM, Prime Minister drought. Okay. For any drought reason, government may call for the donations to give the compensation, subsidy and all. If you are donating for the drought, then automatically you will be eligible for 50%. What are they? Nehru, Indira Gandhi, Rajiv Gandhi and finally PM drought fund. A category, most probably national level important. You can very easily guess this in the case of A. I will give the list here. National. If the donation meant for any fund or scheme which has the national as one of the part of word, the word national as a part of the fund name, donation name, then 100 percentage. Central government, PM, CM, like posting name, PM and CM, natural calamity like flood, typhoon, etc., except drought calamity. And hope you will be now able to understand this one. National, central government, PM, CM, natural calamity like flood, typhoon, hurricane, even tsunami, in all these cases will come under this, except drought, PM drought fund. And Africa, Africa related fund, international, some approved universities as per this scheme. And Clean Ganga, Swachh Bharat. Clean Ganga and Swachh Bharat. So you see, the Bharat is very Swachh now. Okay. Swachh Bharat and all. Okay. Clean Ganga and Swachh Bharat scheme. Apart from that, approved university, state medical relief. State medical relief. And Zilla Saksarda. Okay, if you are not able to remember the term, then it comes under A category. Zilla Saksarda Samiti. Okay. So these are falling under A category. National, central government, PM, CM, natural calamity, Africa, approved university, state medical, as well as Zilla Saksardi, and Clean Ganga and Swachh Bharat. All these things are coming under A category. B category, very simple, only 4. C category, only 2 items. One is family planning promotion items, expenses. Family planning promotion. Given to local authority or government. You donate it for family planning purpose to the local authority or government, then deductible. Olympic. But in case of Olympic, this is available only for the corporate associates, not for others. Corporate associates. This one is for corporate. Only these two. If you are donating for the family planning promotion activities to the local authority and government, okay, maybe state government, whatever it may be, then you can claim the deductions at the rate of 100% subject to a ceiling. In case of Olympic, the donation is given only by the corporate. And D is the local level. Okay, like even small trust can also start and register themselves for claiming the deductions. You may see our trust is registered under section 80G. You can claim the deductions under section 80G. So all the trust, private trust or some charitable trust can also register and to claim the deductions benefit, that will fall under 80D. Any approved fund, government, local authority, other than family planning purpose, maybe charitable purpose, charitable, housing scheme, city development, minority community, temple and all will come. Temple and all, local level. Okay. See here. I have given the list here. National, central government, PM, CM, natural calamity, Africa, approved university, Zilla Saksarda Samiti, state government medical relief, Clean Ganga and Swachh Bharat. Without any ceiling, 100% can be claimable. Here, Nehru, Indra, Raju, PM drought with ceiling 50%. And government or local authority, you are donating for the family planning activities, then 100% with the ceiling. Olympic requirement also you can donate, but it is available only for the corporate associates. And in case of 50% with ceiling, approved any institution, fund, trust for the charitable, housing and city development, minority communities interest, renovation, repairs for the temple, mosque and all will come under the last case. Okay. So comprehensive list is there. National defense, national foundation for communal harmony. So national. Okay. All these things are falling under national group. One is defense, communal, children fund, blood transfusion, and state council for blood transfusion, illness assistance, sports, disease. All these things are okay. Then central, PM, CM will come under this category, and earthquake, and this chief minister also comes under posting. Trusted institutions for earthquake, natural calamity. So these two are natural calamity. And Africa, approved university or education institution, Zilla Saksarda Samiti, Swachh Bharat, Clean Ganga. Even if it starts with state related to the medical relief to the poor can be deductible 100%. Again, here we have national, here PM Citizens Assistance and Relief Emergency Situations Fund, simply called as PM Care Fund. All these things can be deductible at the rate of 100% without saving. And Nehru, Indira Gandhi, Rajiv Gandhi, and Prime Minister Broad Fund, 100% donations with ceiling. Donating to local authority institution association for promoting family planning. Other than family planning, if it is for the charitable purpose, then this will come under with the ceiling 50% deductible. In case of Olympic, this donation should be given only by the company for building the infrastructure, housing development, and minority community, temple, mosque, gurudwara, church, and other places, historic nature. For all these things we are donating, then 50% is only deductible with a ceiling. Hope you now understand all the sections here, all these donation type. Let me try to solve this some illustrations for section 80 G series. One of the time consuming sections being this one after 80C. For 80C also I have given a small notes to remember. Similarly here also for 80G I have given a small content here to remember. Once these two are over, rest of the things are very simple. Okay, let's try to solve this one now. Tilakam has given donation of rupees 30,000 in cash and cement bags 20,000. So cash not allowed, cement bags in kind not deductible. So nothing is deductible. What is the deduction under section 80G? Okay, nothing is deductible. That's all. Okay. Now what is the ceiling is available usually? 10%. 60,000 is deductible. And that too 50% on this. If she is eligible. If she is eligible. Provided in this case nothing is deductible. Nothing is deductible. Yes. Next question. Mr. Raj Mogan, whose gross total income being 6,40,000. GTI, gross total income, 6,40,000. Stamp duty paid on acquisition of residential house, self-occupied 50,000 rupees, stamp duty value. Can be deductible under section 80C. 5-year post office scheme, deductible under section 80C, term deposits, time deposit. Donation to recognized charitable trust 25,000, which is eligible for deductions under section 80G at the applicable rate. Charitable trust then 80G. Okay, ceiling and 50% is only eligible. Charitable means automatically 50% will be eligible. Interest on loan taken for higher education of spouse paid can be deductible interest under section 80E. Now you have to find out the adjusted total income. So you can claim 80C deduction. How much is that? 50, maximum 1,50,000 can be deductible. 70,000 rupees, right? 70,000. We have two deductions here. 50 and 20. Okay. And 80E, interest on education loan, 10,000. What is the adjusted total income? Gross total income being 6,40,000 minus 80 series deductions, leaving 80G. We have two items here. 80,000 can be deductible. 5,60,000. From there again you can subtract 111A short-term capital gain, 112A long-term capital gain deductions can be claimable. Of course, we don't have such income, so only 5,60,000. Ceiling is 10%, 56,000. But here this value is 25,000. 25,000. So the entire 25,000 is eligible. Your ceiling is 56,000, but the donation claimable under section 80G is 25 only. So entire 25,000 can be claimable, and that too only 50% is eligible. So 50% on eligible deduction being 12,500. You can subtract the 3 from here. So taxable income being 5 lakhs 47 500. Shall I move on to the next one? Come on, text me. Now, Mr. Shiva, aged 58 years, has gross total income being 7,75,000. Gross total income being 7,75,000. Comprising income from salary and house property only. Premium paid to insure the life of her major son, major daughter. So, major, minor doesn't matter. You are eligible for claiming the deductions. Policy taken on 1/4/2020. Sum assured being 180. Then how much is claimable? 10% on this. 18,000 can be deductible. So 80 C LIC. How much? 18,000. Medical insurance premium for self and spouse 80D. How much is claimable? 25,000 as Shiva's age is 58 years. Donation to public charitable institution registered under section 80G. This will be with the ceiling 50% is allowable. LIC pension fund deductible under section 80CCC. How much? Up to 1,50,000, entire 60 can be deductible. Donation to National Children Fund. Okay, PM drought fund is 50. Yes, national means automatically no ceiling, 100% can be claimable. Jawaharlal Nehru without ceiling, 50% can be claimable. Donation to approved institution for promotion of family planning. Family planning means ceiling with 100% claimable. Deposit in PPF 80 C can be deductible. Now we'll start with 80C here. So LIC and PPF. How much is claimable? 1,18,000 can be claimable. Okay. 7,75,000. These two will fall under 1,18,000. And we have 1 is completed, 8 is completed. Now 4th 80CCC LIC anti plan pension plan, the value being 60, overall value being 1,78,000 anyhow, subject to a limit of 1,50,000 can be claimable, so 1,50,000 is eligible here. 1,50,000 is eligible. Is that clear? Then 80D is all about mediclaim insurance policy. Mediclaim, how much is claimable? 25,000. And this is also donation, 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 donation. All these things are falling under 80G series. So 80G donation. I have to calculate that separately. So after that, the income will be called as total income for taxable purpose. Now from the gross total income 7,75,000, you have to remove long-term capital gain falling under section 112 and 112A, and short-term capital gain under 111A, and all the deductions under 80 series except 80G. Okay, so 80C, 80CCC, 80D. These two 150 and this will be 25. You'll get adjusted total income. Adjusted total income. How much is that? 6 lakhs. Now I'm going to calculate the deductions. 80G in detail. Here, no ceiling, 100% category. Where? This one. 25,000. National Children Fund 25,000. Second, no ceiling, 50% category. Here is Nehru. How much is that? 25,000. In this entire 25,000 claimable, in this only 50% is 12,500 is claimable. 3, 4 with the ceiling 100%, with the ceiling 50% category. Okay, ceiling category. In ceiling category, family planning, and charitable purpose trust. Charitable. The value being charitable 50, family planning being 40, 90. But what about the ceiling here? Out of adjusted total income 10%, 60. You will be eligible for only 60. Now out of that 60, you have to disclose the 60 is for this extent. First of all, first ceiling with 100% purpose will be satisfied. Family plan 40,000 rupees. Still you have the donation bill another 20,000 rupees. Now you show this 20,000 is for this purpose. Ceiling with 50%. Charitable purpose. This value being 20. This will be 100% eligible. This only eligible for 50%. Get the overall value. $87,500. So here it is 87,500. If I deduct all the three, then total income for the taxable purpose being 5,12,500. Hope now we'll be able to understand this one. Now, 80GG is nothing but the deductions eligible from gross total income. Applicable for all individuals where rent payment is done. And he should not claim the deduction under HRA. Not received HRA or not claimed in deductions under this. So just to similar to HRA, he can claim the deduction also here. Rent paid over 10% of salary. That's how you studied in HRA. The same available here. Rent paid over 10% of adjusted gross total income. The adjusted total income is nothing but what? Gross total income minus 80G series. 80 series except 80GG. There 80G, here 80GG. And 111A, 112A and 112. Okay, these are removed. That will be called adjusted total income. 112 and 112A. And 25% of the adjusted gross total income and 5,000 per month ceiling. In HRA, what do you do? Rent paid minus 10% of salary, 50% or 40% of salary, and rent received. That's how we studied there. Here, this is slightly different. Rest of things are the same. He should not possess his own house property. He should actually pay. Okay. His spouse or minor children or half in which he is a member does not own any residential accommodations in that workplace. He should not have the house property. Means he should reside only in the rental premises and he has to pay the rent. That's all. Raman engaged in business, his total income being 3,10,000. He paid 8,000 per month for residential accommodations. Come on. 80GG deduction being whichever is lower of number 1, rent paid minus 10% of adjusted total income. Rent paid being 10,000, we assume this 3,10,000 itself adjusted total income. So 10% into 3,10,000. 8,000 per month means into 12 months. Come on, tell me the value. 96 minus 31, 65,000. Next being 25% of adjusted total income. How much is that? 77,500. And third being ceiling. 5,000 into 12. 60,000. Among the three, the least will be taken. That's all. Now we'll move on to the next one. It's very simple illustration. In the next illustration also same way. Mr. Jamal, a resident individual, runs a manufacturing business in Delhi for the previous year 24-25. He disclosed his taxable income as below. Business profit PGBP 2,80,000. Long-term capital gain 25,000. Short-term capital gain 15,000. He has hired furnished accommodation for his own use and pays 4,000 per month. Okay. Then gross total income in this case being 3,20,000. And as he pays the rental, he can claim the deduction under section 80GG. He has paid donation amounting to rupees 10,000 to National Defence Fund. So 80G deduction. National is there, no, so the entire value can be deductible, so 10,000. And he has deposited 50,000 under the scheme framed by the LIC for maintenance of his dependent brother. So then 80DD. With a disability, then standard deduction 75,000 or 1,25,000 as the case may be, you can claim the deductions. The disability certificate certified by the medical authority that all these things are okay. Now 80G deduction. under 80 GG deduction. Under 80 GG deduction, how can you calculate? Whichever is lower of rent paid minus 10 percentage of adjusted total income. Second being 25 percentage of adjusted gross total income. 3 being limit ceiling. 5,000 into 12, 60. Now adjusted total income being from the gross total income, you have to remove what? Long term capital gain 25,000, short term capital gain under section 111A, but here it is not stated whether it's a 111A or not. If it is not 111A, you should not subtract this. And deductions, all the deductions except 80 GG. We have these two deductions, so 85,000. Okay, 10 plus 75. Come on, get me the value. 2 lakhs 10,000. Now rent paid being 4,000 per month, so 4,000 into 12 minus 10% of this being 21,000. What's the value? 27,000 and 25% of this value. How much? 52,500. Among the three, the least being 27,000 can be deductible under section 80 GG. Now taxable income in this case being 2 lakhs 8,000. Hope now we'll be able to understand this one. Now, let's move on to the next one. 80 GGAA is similar to the donation studied under section 35, donation and contributions for scientific research as well as rural development, where we have seen RICU and all, right? The same way. Okay, university, college, other institutions, associations, public sector company, local authority. If you are donating for scientific research to approved association, university, college and other institution, social and statistical science and eligible projects and rural development, then you can claim the entire donations deduction to section 80 GGA. Provided you should not involve any business, you should not have the PGP income, because if you have the PGP income, you can claim the deduction under section 35. All assessee, provided assessee should not have income from PGPP. Donation more than 2,000 should not be in the form of cash. 100% donations can be given. That's all. 80 GGA. And 80 GGB and GGC, these two are again deductions for donations given to political parties. Okay, political party. Okay, by a company. This is available for a company, 80 GGB, and 80 GGC is the donation given by anybody other than company to electoral trust or political party. Electoral trust or political party. Is that okay? Electoral trust, they will collect the donations from various members and used for their own party. Again, it will go to political parties only. Okay, electoral trust and political party. See, every political party will form a trust called electoral trust, meant for collecting the donations for their own party's requirement. So they will have the electoral trust, they will collect the donations from various people like electoral bond, and that bond is now used for political parties promotion activity. Right. If the donation is given by the company, can be deductible 100%. If the donation is given by other than company, can be deductible under section 80GGC. Is that clear? Applicability, Indian company. Contribution includes advertisement. Okay, contributions. Then finally, quantum of deductions being 100%, but it should not be in the form of cash. The same. The same. So here Indian company, any person other than an Indian company. Any person other than Indian company. Okay. C 80 GGB GGC. In case of company, they can claim the deduction. So, for example, they have donated around 1 lakh. They can claim the deduction 1 lakh under section 80 GGB from the gross total income. From the gross total income. Gross total income being 20 lakhs. From the gross total income, company can subtract 1 lakh. If the assessee not being the company, gross total income is 20 lakhs, they have donated 1 lakh to the political party or electoral trust, then they can claim the deductions 1 lakh from 80 GGC. Clear? If you are being the corporate, then you can claim the deductions under section 80 GGB. If you are not being the corporate, then you can claim the deduction under section 80 GGC from your gross total income. Remember, this 1 lakh is nothing but donation. Okay. Suppose instead of donation, if you are spending around 50,000 rupees for advertisement in political parties magazine, they publish their own magazines, election manifesto and all. So I may give 1-page ad for promoting myself. What can we do? Any advertisement expenses you do know it's related to the business can be deductible under section 37 in general. Revenue nature expenses related to the business can be debited under section 37 class 1 general expenses. There I have already told you section 37 class 2b. As per section 37 class 2b, any expenses incurred for advertising your company or yourself in a political party's magazine is disallowed. Is disallowed. Is that okay? So, C 50,000 rupees. Your PGBP being 19 lakhs 50,000 rupees. 19 lakhs 50,000 rupees. After debiting political parties magazine advertisement incurred in the political parties magazine. Is that okay? Whatever your gross profit may be, from there you deducted 50,000 rupees for advertisement expenses and stating your PGBP being 19 lakhs 50. As per section 37 class 2b, go and refer that in PGBP chapter. As per section 37 2b, any advertisement expenses incurred for publishing your advertisement in political parties magazine is disqualified. So because of that reason, you have to add this back. Disqualified. Okay. Advertisement not deductible. I added this 50,000 back. After adding this, I found out the business income being 20 lakhs. Is that clear? So some expenses cannot be debited in the P&L account as per the provisions. Like if you are making the payment in the form of cash in excess of 10,000 disallowed, and unreasonable payment to the relatives disallowed, or if the payment seems to be done without TDS also disallowed. Similarly, any expenses incurred for advertising your business in political parties magazine is disallowed. In political parties magazine is disallowed. Clear? But this 50,000 advertisement given in political parties magazine, you know, is considered as a donation claimable as deduction under section 80 GGB. From 20 lakhs, 1.5 lakhs is subtracted. So taxable income in this case being 18 lakhs 50,000 rupees. What happens for the individual, sir? Can I claim this 50,000 as a part of donations? No, not eligible. So contribution to the political parties magazine being your donation like if you are being non-corporate, if you are being corporate. If you are being non-corporate, okay, you are not eligible for claim this deduction under section 80 GG. See, here also disallowed, here also not claimable. So 19 lakhs will be your income to be taxable. Understand that. Contribution for the company includes advertisement in political parties magazine which was disqualified to be debited in the P&L account as per section 37 class 2b. As per section 37 class 2b, disqualified and it will raise the profitability of the company. After that, you can claim the same as a deduction under section 80 GGB if you are being the corporate. If you are being non-corporate, you cannot claim this. Is that okay? Here, this will not be considered as deductible item here. This is available only for the corporate. See here. During the previous year 24-25, ABC Limited, an Indian company, contributed a sum of rupees 2 lakhs to an electoral trust and incurred expenditure 25,000 for advertisement. So these two can be claimable as deduction under section 80 GGB. Is the company eligible for deductions in respect of such contribution expenditure, assuming the contributions made by check? Yes, of course. If so, what is the quantum of deduction? The quantum of deduction will be 2 lakhs 25,000. 2 lakhs 25,000. Is that okay? In case non-corporate, you are not eligible for this 25,000. Only 2 lakhs is eligible. So here 2 lakhs and 50, 2 lakhs 25,000 deductible. Non-corporate, only 2 lakhs is deductible. And this particular one is disallowed under section 37 class 2b and added this with the income. Advertisement in brochure of political parties disqualified should be first included in the profit. Later on, if you are being the corporate, can claim this as a deduction under section 80 GGB. If you are being non-corporate, you don't have the options to claim. Clear? So the last one. Rajan has to pay a hospital for treatment of 62,000 and spend nothing for life insurance or for maintenance of the dependent disabled. Okay. So spending and no amount contributed for the life insurance and other things, as it is being the dependent disabled, 80 DD will be applicable. How much deductions will be claimable? 75,000 or 125,000 as the case may be. Raja, a resident Indian, has spent nothing for treatment in the previous year and deposited 25,000. Okay, deposit also eligible, the same. Rajan has incurred 20,000 for treatment and 25,000 for deposit. Okay, whatever it may be, whether you deposit or treat or a portion here or there, you can enjoy the benefit. Payment of 50,000 by check to an electoral trust by an Indian company. By an Indian company eligible under section 80 GGB. 50,000 can be deductible. Is that clear? Hope now you'll be able to understand. So with that, 80G series is completely over. Rest we will continue in the next class.